Is too much money a trend or just a plague? Well, I think 2-3 things that will, and I think we just heard it from Vanessa as well. I think the trend for continued large amounts of capital flows into Germany will continue, as it will into Europe. We are in times where money is not an issue, both on the equity side and on the debt side. Actually, debt and equity are now competing with each other, so that'll bring the price of money down probably a bit further as well. We have a bond situation that is extremely low. I don't know if it's the right comparative, to tell you the truth, because with a bond you get your equity back. With real estate, potentially maybe not so much, but it is the normal comparative. So the spreads on bonds are important. So you have spreads on bond that are great, you have very low cost of money, and you have a very sophisticated industry by now. Yeah? So you actually have the investment managers on the ground willing to take in international money and being able to commit and transact. So all the parameters are there. Personally, I think there's a certain risk in the continued increase in pricing or reduction of yields moving forward. I think they're being mispriced potentially, but this we can go on in the discussion as we move forward. Simply because I don't see the underlying parameters in the short term driving that pricing, and I'm a bit worried that the rental and the income side is being misplaced, and the risk-adjusted returns there aren't quite fair. But that's a very general statement, and doesn't really, you'd have to take that bit apart a little.
Well, the occupier side always stays the same, no matter what capital is flowing to Europe or to Germany. That's kind of, it's not a problem, but it's just a fact. In terms of global capital seeking investments into Germany, that's definitely a must. There will be more money coming in 2015 and 2016, so we will see the yields going downwards further. The earliest that we expect a change in interest rates is 2017, so the yield play is going to continue on the basis of different occupier fundamentals in Europe. Germany is looking relatively strong, and that's why it will get a fair share of that money coming over. And only giving you an example of our company or our new shareholder company, TIAA, they so far had, before they did the merger with us, they only had $2 billion of $50 billion that were invested outside the US. And that is the same picture with many of the other global pension funds, and not only in the US but also in Asia. And that's why for a normal diversification reasons, there's a wall of money coming into Germany and Europe, and this is going to continue because we still have the nice spread of property yields over bond.
I tend to disagree a little on the outlook, which I would like to go on the record with. I fully agree in the short term. Everything you said, I can fully underwrite. There's a wall of money coming. There are higher LTVs than ever. There's a competition of lended money to equity. Absolutely, that's out of question. What I, however, and I would like to hear your opinion later on that. What I, however, see differently, you said you expect a change in the interest rates, in the trend of the interest rates in 2017. That, from my perspective, may be correct for Europe, but I expect a change in the trend in the US much earlier, somewhere in the next year. And what I think is that the mere fact that such a trend changes will be a signal to markets across the world, because it means what you experience now will definitely end. And the question is simply, when will it end? So how that wall of money reacts at that point in time is a good question, because there's a word saying money is a childlike game. And that proves to be true, and it hates to get burnt. So, having had the experience of the financial crisis, we think that will also in Europe, also in Germany, trigger a change.
Of course, if I'm in the competition of the buyers, I have to focus on the real estate targets, and if I have a good asset management in place, I can take some risk and have a better situation in the competition. And of course, development projects is a huge part of the market, and it's sensible to focus on that. To create new prime products, we need more production to reduce the competition in the buyer market.